Meta is facing a major scam controversy. Elon Musk has some wild plans for Neuralink. China just ordered 2 million AI chips. Problem is, they don't exist yet. $41 billion just got dropped on AI. And France is moving to ban social media for teenagers. We've got more tech stories ahead, so let's dive in. Alright, so let's start with something that sounds like a Black Mirror episode, but it's actually happening right now. Elon Musk just announced that Neuralink is going into high volume production by 2026. And here's the kicker. They're moving to fully automated surgeries, like robot surgeons installing brain chips. That's the timeline we're living in. Now, if you've been following this, you know they started human trials back in 2024 after the FDA initially rejected them in 2022. They had to address some serious safety concerns first. But fast forward to today, and they've got 12 people worldwide with these implants actually using them. And what are they doing with them? Well, the first patient was literally playing video games, browsing the internet, and posting on social media just by thinking. No hands, no keyboard, just pure thought to action. This is specifically designed for people with severe paralysis or spinal cord injuries. Imagine being completely paralyzed, but being able to control a computer with your mind. That's not the future anymore, that's 2026. When they hit mass production, this technology becomes way more accessible. And automated surgery means it's faster, safer, and potentially more affordable. This is huge. Okay, so let's shift gears and talk about semiconductor geopolitics, because this is getting wild. The US government just granted Taiwan Semiconductor Manufacturing Company, better known as TSMC, an annual license to import American chip-making equipment into their facilities in China, specifically their Nanjing plant. Now, why does this matter? There was this major deadline on December 31st where the so-called validated end-user status was expiring. Starting in 2026, Chinese chip makers need special export licenses to import US equipment. This was a big deal. TSMC joins Samsung and SK Hynix in getting this approval. And TSMC came out and said, this license ensures uninterrupted operations and product deliveries, which is corporate speak for we need this to keep the global tech supply chain from collapsing. Here's what's interesting. Despite all the US-China tech tensions and export controls, there's still this recognition that we need practical business solutions. The whole world runs on semiconductors, so completely cutting off supply chains would be catastrophic. It's this delicate dance between national security concerns and economic reality. Fascinating to watch play out. Speaking of chips, this next story is absolutely bonkers. Chinese tech companies have ordered more than 2 million of Nvidia's H200 chips for 2026. That's the new AI powerhouse chip. But here's the problem. Nvidia only has 700,000 units in stock. Yeah, they're short by over 1 million chips. So what's Nvidia doing? They're literally going to TSMC and asking them to ramp up production. Sources say TSMC is expected to start manufacturing additional chips in the second quarter of 2026. This is emergency level demand. And get this, each H200 chip is priced around $27,000. That's for one chip, and that's actually 15% cheaper than what you'd pay on the grey market. Let me repeat that, $27,000 per chip. And that's the discount price. Why is everyone going crazy for these? Performance. The H200 delivers roughly 6 times the performance of the H20, which was a downgraded chip Nvidia made specifically for China that later got blocked by Beijing anyway. Here's where it gets political. The Trump administration recently allowed H200 exports to China with a 25% fee attached, but Beijing hasn't approved it yet. ByteDance alone, that's TikTok's parent company, is ready to drop $14 billion on Nvidia chips in 2026 if China gives the green light. That's the AI race right now. Alright, staying on the semiconductor theme because this industry is literally the battlefield of modern geopolitics. So back in September, the Netherlands dropped a bombshell. They issued an order blocking Nexperia from making important business decisions without government approval. Why? They're concerned that Nexperia's Chinese owner, Wingtech, wants to relocate European chip production to China. China was not happy. They came out this week and urged the Netherlands to correct what they called mistakes and remove obstacles to global chip supply chain stability. Now here's why this matters so much. Nexperia supplies about 70% of the global automotive chip market. We're talking about the foundation chips, transistors, diodes, power management. These are in literally every electronic device. Major companies like Nissan and Bosch have already warned about potential shortages. The German Automotive Industry Association raised concerns about elevated risks. This is serious. In November, the Dutch government temporarily suspended the intervention as a goodwill gesture, but the dispute isn't resolved. The Dutch Economic Affairs Minister defended the decision, saying it wasn't enjoyable, but it was necessary. This perfectly illustrates how technology and geopolitics are completely intertwined now. It's not just about business anymore. It's about national security, supply chain control, and economic power. Let's pivot to space because China is making some serious moves. LandSpace, China's leading private rocket company, is planning to raise over $1 billion in an IPO to boost their reusable rocket technology. And they're basically trying to become China's answer to SpaceX. Here's what makes this historic. Earlier this month, LandSpace became the first Chinese entity to conduct a reusable rocket test. Now the landing didn't succeed, the booster didn't make it, but the attempt itself was groundbreaking for China. For context, SpaceX needed 3 attempts to nail their first successful landing back in 2015. The Shanghai Stock Exchange just eased IPO rules specifically for Chinese companies developing reusable rockets. This is part of Beijing's massive push to close the gap with the United States in space capabilities. Why does reusable rocket technology matter so much? China wants to launch over 10,000 satellites in the coming decades for their mega constellations. Reusable rockets dramatically cut costs and increase launch frequency. It's the difference between throwing away a 747 after every flight versus refueling and flying it again. LandSpace's next test with their Zhuge 3 rocket is planned for the first half of 2026. And get this, Elon Musk himself acknowledged that this rocket could potentially beat the Falcon 9. When your competitor complements your technology, you know you're doing something right. Now let's talk crypto because Bitcoin is having a rough year. For the first time since 2022, Bitcoin is on track to post an annual loss. At year end, it's down about 6%, trading around $87,000. This is after 2 consecutive years of gains. So what happened? Bitcoin has been on an absolute roller coaster this year. After soaring early in the year with Trump's election, he's been pretty crypto friendly. Everything crashed in April when he announced his tariff plans. Then in October, Bitcoin hit an all-time peak of over $126,000. Insane, right? But then on October 10th, the market plummeted again when Trump announced new tariffs on Chinese imports and threatened export controls on critical software. That single event triggered more than $19 billion in liquidations across leveraged crypto positions. That's the largest liquidation in crypto history. $19 billion gone. Here's what analysts are saying. Bitcoin is increasingly behaving like a traditional risk asset. It's showing a notable correlation with the US equity market now. It's not really that alternative investment anymore that operates independently of traditional markets. Why? Because institutional investors and big financial players have entered the space. When Wall Street gets involved, Bitcoin starts moving with stocks. When the market gets scared, Bitcoin gets sold off too. On the regulatory front, there's been some good news. The Trump administration's first year saw major wins for crypto. The SEC dismissed Biden-era lawsuits against Coinbase and Binance. But comprehensive crypto legislation is still pending. Bottom line, Bitcoin's maturing, and with that maturity comes correlation with traditional markets and all the volatility that comes with macroeconomic uncertainty. This next story is pretty controversial, but it's happening. France is planning to ban children under 15 from social media sites and prohibit mobile phones in high schools starting September 2026. President Macron has been vocal about social media being one of the factors behind violence among young people, and he's signaling that France wants to follow Australia's lead. Australia just implemented a world-first ban for under 16s on major platforms like Facebook, Snapchat, TikTok and YouTube. The government's submitting draft legislation in January for legal review. Keep in mind, mobile phones have already been banned in French primary and middle schools since 2018. This new law extends that ban to high schools. Public support? Pretty strong actually. A 2024 Harris Interactive survey showed 73% of people support a social media ban for under 15s. But here's the challenge: enforcement. France already passed a law in 2023 requiring parental consent for under 15s on social media. But technical challenges made enforcement really difficult. How do you actually verify someone's age online without invasive measures? This is part of a broader movement. The European Parliament urged the EU in November to to set minimum ages across member states. Denmark and Norway are considering similar bans in 2026. The big question everyone's asking is, can you actually enforce this? And even if you can, is banning the solution, or should we be focusing on better education and digital literacy? That debate's ongoing. Alright, this is probably the biggest financial story of the year in tech. SoftBank just completed its $40 billion investment commitment to OpenAI. Let me say that again. $40 billion. They sent over the final $22 to $22.5 billion just last week. They had previously invested $7.5 billion directly and syndicated another $11 billion with co-investors, bringing the total aggregate commitment to $41 billion. This makes SoftBank the second largest shareholder in OpenAI after Microsoft, with around an 11% stake. Let's talk valuation for a second, because these numbers are mind-blowing. When the deal was announced in March, OpenAI was valued at $300 billion post-money. By October, a secondary stock sale pushed that valuation to around $500 billion. That's a $200 billion increase in 7 months. SoftBank CEO Masayoshi Son has made what he calls an all-in bet on artificial intelligence. His vision is to dominate AI and related infrastructure globally. This isn't just diversification, this is conviction. This investment came just days after SoftBank announced a $4 billion deal to acquire Digital Bridge Group, a digital infrastructure investor. They're building an AI empire. What's the money for? OpenAI's Stargate project, which is a massive multi-year data center initiative. They're expanding AI infrastructure and developing next-generation models. OpenAI has made over $1.4 trillion in infrastructure commitments over the next several years, including deals with Nvidia, AMD, and Broadcom. Here's what's wild. SoftBank recently sold their entire Nvidia stake, which was worth $5.8 billion, and that capital partially funded this OpenAI investment. They're literally betting that the company building AI models is worth more than the company making the chips for those models. This is the biggest bet on AI we've seen from any single investor. Period. Let's talk about China's AI sector, because there's a massive wave of activity happening. First, multiple Chinese AI firms, including Minimax, have filed IPO applications in Hong Kong in this year-end rush. The timing's interesting because it coincides with this global AI arms race intensifying. Brain, which is a Chinese AI chip firm, just raised $717 million in a Hong Kong IPO. This is part of China's push to boost domestic chip manufacturing capabilities, especially as US export restrictions get tighter. Then there's CXMT, Changxin Memory Technologies, which is China's top DRAM chip producer. They just announced a $4.2 billion Shanghai listing. That money is going into DRAM expansion and technology advancement. Right now, CXMT only controls about 4% of the global DRAM market, while Samsung, SK Hynix, and Micron combined control over 90%. China wants to close that gap, and they're throwing serious money at it. And remember ByteDance from earlier? They're planning to spend about 100 billion yuan, that's roughly $14 billion on Nvidia chips in 2026, up from 85 billion yuan in 2025. That's if China approves H200 sales. What we're seeing here is China going all in on AI self-sufficiency. They're building their own chips, raising massive capital, and creating an entire AI ecosystem that's less dependent on Western technology. This is strategic, this is long-term, and this is billions upon billions of dollars in investment. Last story, and it's about accountability. Meta, Facebook's parent company, is being sued by the US Virgin Islands over allegations that they're allowing scam advertisements and failing to protect children from dangers on their platforms. Details are still limited, but this lawsuit is part of a much broader trend where governments and regulators are holding tech companies more accountable for user safety, especially when it comes to minors. The pressure on social media platforms is increasing across the board regarding content moderation policies, age verification systems, the spread of harmful content, and children's online safety measures. This case could set an important precedent about platform liability and content moderation responsibilities. Are platforms just neutral hosts of user content, or do they have a responsibility for what happens on their sites? That's the fundamental question. With everything we talked about today regarding France banning social media for kids, this Meta lawsuit fits into that larger conversation about how we protect young people online. It's not just about regulation anymore, it's about litigation too. Alright everyone, so that's it for today's tech updates. Now I want to know, which of these stories shocked you the most? Was it Neuralink's mass production plans, ByteDance's chip spending, or maybe France's social media ban? Drop your thoughts in the comments below. And don't forget to like, subscribe to the channel, and hit the notification bell so you never miss an update. See you in the next one.